I think this is the year that a lot of folks found out that fairy tale does not work.
Since World War II, there's never been a soft landing with inflation above 5% and unemployment below 5%, which right now we're sitting at 3.7%. So do you think there's possibility of a soft landing?
Right now, it's going to be much worse in Europe and the rest of the world. And we're seeing this in the US dollar strength. So inflation and rising interest rates, it's very important to tie that to the strength of the US dollar. Why? Well, until it's not, I always say to folks, the US dollar is the world reserve currency. And because it's the world reserve currency, there is a demand globally for the US dollar. The South African Reserve Bank have to hold US dollars in reserves. Well, the Federal Reserve Bank in the United States do not have to hold South African rands in reserves. So a lot of central banks around the world are holding US dollar reserves, which creates a demand for the dollar because it is still the world's reserve currency. And also, I think what a lot of folks in the United States sometimes miss too, and I'll just give you an insight from someone that grew up in Africa, right, in South Africa, is that loans throughout the rest of the world is usually made by the IMF and the World Bank. And these loans are in US dollars. So when interest rates go up, well, all of a sudden there's more dollars needed to pay those loans and to keep those loan payments current. So that also drives up the strength of the dollar. But back to your question, do we have a soft landing coming? I don't see a soft landing coming in my worldview and in my opinion, because I look at what people and institutions are doing, not just what they're saying. And one of the things that really caught my eye, one of the news stories, again, that was a little bit hidden, on the internet, was that the Vatican, the Pope, actually put out an order to recall all of the financial assets, the liquid financial assets of the Vatican, and have it back inside the Vatican bank 30 days after September 1st when he issued that order. So that means by September 30th, and I know we're past that already, all of the financial assets, the liquid ones of the Vatican Bank is back in the Vatican Bank. So they're essentially pulling funds from the world financial system, which is very interesting. And that just leads me to believe that they don't think that there is a soft landing coming. It leads me to believe that they think that there's a pretty much a hard landing on its way too. And if you look at some of the other investors like Carl Icahn, he has mentioned kind of the same thing, that he's getting prepared for a very, very hard landing. And actually the same with Ray Dalio, which has just stepped away from his firm. Actually today, at the time of recording, was breaking news today. So it's interesting to see and look at what people and institutions are doing. By their deeds, you shall know them. And by looking at their deeds, it looks like they are bracing for a pretty hard landing.
Yeah, and the Vatican would definitely be considered a big institution. So right there, guys, and that story is not super well known. I did happen to come across that. And I had a couple kind of initial thoughts when I read the article. I wonder what they're going to do with that. Are they going to convert, in your opinion, all of those, financial assets into something else like gold, for example? My second question would be, there's a ton of Swiss bank accounts over there, obviously, and they're talking about the Secretary of State converting all of the financial assets. I wonder how that's going to go over.
Yeah, I think what they're looking at is just kind of protecting what they have. And I'm sure they have a strategy of allocating all of those assets in different buckets to hedge from a perfect storm. But when I say a perfect storm, if you look at a debt storm, that's going to be a perfect storm because, again, that storm will be all across the globe. There's no one that can run from essentially what's happening in the debt markets.
Yeah, and I just pulled this up while we're on this video here, and the Vatican Bank managed $5.2 billion in assets in 2021, but their net profits are super down over the last 3 fiscal years. So if you look at 2019, net profit of 46 million, 2020, net profit of 44 million. 2021 dropped all the way down to 19 million in net profits. Oh, wow. So Vatican don't like that, apparently. So they're making moves over there. But when big institutions, to your point, when big institutions like that do make moves, that's got to get your attention. Certainly has mine, and hopefully the viewers here can do a little bit more research on that, because that is important, guys. So all this stuff's going on around us here. What does this leave a traditional 60-40 portfolio looking like, in your opinion?
I think this is the year that a lot of folks found out that fairy tale does not work. So I think at the time of recording, it's down. The average 60-40 portfolio is down about 20% year to date. So yeah, I mean, usually for folks not familiar with that portfolio, essentially what they do is they look at your age when they design a portfolio for you. So in your earlier years, when you're just getting started, you're much more aggressive in the equity market. So you have about 60%, let's just say, of your portfolio allocated in equities and 40% in bonds. And as you grow older and along your journey and you're getting closer to the age of retirement, that's actually flipped. So you have 60% then allocated in bonds, which is debt. And then you have 40% allocated in equities. And it was the game plan, and it is the game plan still for the majority of folks that are going to look to retire. And I think they've already gotten quite a surprise this year. As I mentioned, year to date, it's down 20%. And in my worldview and opinion, that's going to go down much, much more. Because if you think about what has happened historically, if equities go down, bonds are doing okay, right? It's kind of a stabilizing factor, and vice versa. Equities go up, bonds kind of, linger and go down slightly. But what if both of them go down at the same time? And the other area, which the majority of folks that are ready for retirement have some of their wealth in, is a primary residence. So add that to the mix, right? What if bonds go down, equities goes down, and there's a major correction in the housing market? Now that you essentially have all three areas where most people that are looking to retire fairly soon, especially in the baby boomer generation, have allocated their capital.
Yeah, so guys, if you're watching this and you want to get prepared for retirement, for example, you want to start making really sound financial decisions that could lead towards retirement, reach out to MC and his team. They've got really just a suite of products that and advice that they can give you guys to help navigate trying times like this. Again, we always say this is no time to get cute. Get an expert in investing or in whatever particular investment class you're looking to get involved in. Get a mentor, get a coach, get someone that has been down this road before, because there's opportunities to make a lot of money if you know what you're doing, or if you're doing it with someone that does know what they're doing. So if you want to talk to MC and his team, go ahead and email ninja@vipfinancialeducation.com. Be sure to include your first, your last name, the best number to reach you, and VIP conversation in the subject line. Someone from MC or his team will get back in touch with you ASAP to see, answer any questions first and foremost, and see if it's a good fit. They may be able to help you really navigate these troubled waters right now. So it's definitely worth reaching out. Go ahead and drop that thumbs up below. That helps out our algorithms. If you're not a subscriber, go ahead and subscribe and ding that bell. As always, thanks for joining us. We'll see you on the next episode.